Welcome, my name is Joe Gold, and I'll be teaching this week's lesson on accounts and getting it from the tubular transactions, analysis of transactions. And I'm going to be referring to E3-5 on page 145. Please go to there. What I've done is I went ahead and copied everything that was on the information that you needed to accomplish 3.5. You needed to use it from 3.4, 3-4. So I basically copied it and made my own thing, and to prepare an income statement, retained earnings, and a balance sheet from the information given there. So what I did was I took everything that was in the book, and then I added the sums, totals to make it easier. So what I did, what's nice thing about using Excel, I just did sum total, taking the column and then just go to auto sum. So it was easy for me to get what I needed quickly. So with the income statement, as you can see, it comes out to 5,400. How I came was service revenue, as you can look, came from right here, and I didn't put the actual descriptions which are in your book. But it says $9,500, and then I took all the expense minus all the expenses out, which is pretty easy. And then you take your 800, 3,000, and 300, and then minus the 4,100 to make you $5,400. With that, again, what I did was I just took everything that was in the expense and mixes it in a negative. So when you do it, it's a negative as always. And so I took that, take that 9,500. So my formula was equals to the service minus the expense. So now we got a positive gain of $5,400. The next step was the retained earnings. As you can see on the example that was put in there was no retained earnings as of August 31st. So nothing I can see. So I assume there's nothing. So therefore, I'm going to put 0 right here. With the net, you get your net income from the income statement that was in which you had figured prior, and then minus the $2,000, which was described here in the dividends column. So going back to the retained earnings, you take the net income and then minus the $2,000 from the dividends to make your retained earnings of $3,400. The balance sheet is nothing more than just taking the information from the tubular analysis, and from here. So I took the cash, moved it all the way over to here, AR, which is 4,900. So that's why it was really important for me to do the adding right now. So it was easier to get the transactions easier. And then I made sure though that was my current, and did it. Remember, always to do it based on liquidity. And so that's why cash is at the top, AR and the supplies, and then making sure that's the total current assets. I made sure that there's property, plant, and equipment, and just to make sure that we didn't see, there was no depreciation, so I didn't have to minus that out in the thing. So we had a total. So you're taking your total assets is the additions of all the total current plus the equipment. So coming out to $26,200. Liabilities and equity. It was pretty easy on this one. It was a pretty simple one for liabilities, just one column, which is great, makes it easy. So you take it and minus it all, add it up all together to be $2,800. So I took that $2,800 and applied it right here in the current liabilities. And then the common stock, which was again in the very first on here for the common stocks of 20,000, and then the retained earnings again comes to your prior work which is $3,400. So I took the 3,400, put it to there, add them all together. So that being said, I got this plus this. This and this have to balance, so they come out together. So voila, 26,200. Just to remember, when we do all this, it's really imperative that you get your income statement first. So making sure that you understand where you get your income, so the revenue, and making sure that you have all your expenses listed out, and so you can do your expenses. You can do your net income statement, and then you can go do your retained earnings, making sure you always have to find out where it was the retained earnings. If not, you can assume that there was nothing at the time, and then take your net income divided by which was given to you by the prior to it, prior assignment of the prior tab, which is the income minus the dividend, which is on the tubular analysis to get your retained earnings. Balance sheet again was taken from the tubular analysis report. Everything was there. Only thing I had to get from another report was the retained earnings that I had done before. And nice thing about doing a balance sheet is you can always check, when you're right is when you got those two balancing. All right, thank you. If you have any questions, please get back to me, and I hope this works out. And again, this is on page 144 and 145 in your textbook. E3-5 is our assignment. Thank you very much. And again, if you have any questions, just write me back.